Welcome to Monday Night Live, the weekly training that guides professionals to financial prosperity. Join our community and let's start building your wealth.
Guys, we got the James on for Success Lending, and Luis is already on. Okay, and tonight's subject is we're going to go over a little bit of background on lending. I asked when the Pat's idea came up is to teach a little bit about what happens in the underwriting process behind the scenes, so you're familiar with what goes on. Because one of the challenges is we're dealing with people who sometimes are borderline whether they're going to get approved or not. You need to know what's going on behind the scenes so you know how to prepare your clients the best way possible to get and stay approved. I mean, who's ever had a situation where you got a deal all wrapped up and sometime before closing, your clients go out and buy a car or buy furniture or change jobs, all these things. Yeah, but it's happened. It happened to Gil in Vegas back in March. It delayed the closing for almost 2 months. So we're going to talk about that. But then Success Lending, of course, is our preferred lender. You can use any lender you want. We just want you to use these guys. And Lewis and James are going to explain why. There's some goodies that I didn't even know existed, you know? So, I mean, if you're an active practicing agent, you know, you can participate and partner with someone with Success Lending and get part of the cost paid for. At least that's still from on high. So keep that in mind. So, Lewis, I just promoted James Hampton, right?
You should be there. We'll see.
Yep. So James, if you can hear me, go ahead and let yourself be promoted to panelist. Then I can promote you to co-host. That way you can share the spotlight with Lewis. It looks like he's getting on again here.
So how many of you guys have used Success Lending yet? Has anybody? Trying to see if I see any hands.
Yeah, Mike's got his hand. Mike, if you want to go ahead and unmute yourself, that'd be cool. Hey, James, I'm gonna whoops. Okay, James, let me go check the
My apologies. Can you hear me?
There he is. James. Yes, thank you. Okay. So we'll go ahead and get this ball rolling here. If you want to, Lewis or James, go ahead and kick things off here, introduce yourselves, and everybody get ready to take notes. I'll help monitor the chat box along with Rob, and we'll now. Lewis, do you prefer to take breaks every now and then for questions? You want the questions to come in as when you want to ask them as they roll in?
Yeah, I think if we do a quick introduction, kind of tell us a little bit about ourselves, and then we'll hit the point about what happens in underwriting, like you guys mentioned. But I think it'd be really good if people have questions throughout, right? Because there may be something that somebody says that will help someone else. So it's really important if we can get some questions throughout after we introduce ourselves and start talking about that. I think that will help people understand better than me and James rattling on for, ever, right? So it makes more sense. So really quick, my name is Luis Rios. I'm the regional manager for Success Lending. I said a little bit earlier, I cover the southeast of the country. So from Kansas to Texas to Florida to Virginia. James, what areas do you cover?
And so I'm covering in the Northeast. And first, let me apologize. I've had to bring my dad to the hospital, so I'm in a waiting room. I didn't want to miss the meeting, so that's why I'm off camera. But I cover the Northeast part of the country, so Chicago up through the Northeast. So essentially everything that Lewis is not covering, I got it.
So
I'm sorry, we do have a counterpart who is in the West. It's
correct. Yeah. Which we don't mention people from California on this call. I don't know why.
Okay.
My apology. I'm trying to figure a way here to share screen so that we could share our presentation. And I'm just doing this from the waiting room here. So let's see.
Let's see if it works.
Yeah.
But just real quick, and I know we're going to get to the point about underwriting because that's the main point Gary wants us to cover. But like I said earlier, if you guys have tried Success Lending or have not, you're doing a disadvantage for your client, because any client that you send to us, we will reimburse them up to $650 to go towards their appraisal automatically, just for sending them to Success Lending. So that's number one. But number two, we also help our veterans. So we actually reimburse veterans up to $1,500 credit on a VA loan to help them on the purchase of their home. They can use that to buy down rate. They can use that to pay for closing costs. They can use that for anything they want. And both those programs are called Buyer's Best. I love doing it because I feel like a lot of times clients, when they pay for the appraisal, they feel like, oh my God, I'm never going to see that money again. And then with our reimbursement program, they feel so much better because they're like, oh, at least I'm getting something back from the lender, right? It's something to help them out. And then for you guys that are actual agents that own us, because you guys own Success Lending, 50% of Success is owned by the EXP agent. So you are our stockholders. So you guys are very important to us. And because of that, we give 1% back on conventional loans for you personally and your family members. And we do 1.25% back on government type loans. So if you're buying a home and it's a $400,000 loan, we're giving you $4,000 back. Okay. So basically what we're giving back the profit of the loan to you guys to help you guys close. So as owners of the company, you also have a huge advantage with that program. Okay. Oh, here's a question coming in. What did he say? Let me see. Let's see what it said. See, a lot of questions coming in real quick. Do you think that after class we're gonna? Yes, we could talk about that as well. Is Chris Myers
That's
West
the
Coast
question
with us?
about underwriting multifamilies. Was that Mike McGrath's question?
That's what it looks like. So
Yeah,
Chris
okay.
Myers is a loan officer here in Texas with me. He's on my team. When Chris came on board with Success, he had the most licenses. So he can do multiple states, but no, he's not our West Coast regional. It's Gary. So, but just so you guys have an idea on that. But hopefully you guys knew about the family and program for Success Lending, because that's something really important. Okay. And I don't know if you guys know this, but if you guys as the agents, if we only captured 1% of the buy side of EXP's transactions, we would write a check to EXP for $1 million a month. Okay. I'm sorry, 2% of the buy side, not 1%, 2%. If we captured 2%, that's an incredible amount of money. And if we captured 10% of the buy side transactions, Success Lending would be one of the top 3 mortgage companies in the United States. And the amount of money that we would give back to the agents would be phenomenal. Just an incredible amount of money. It's a crazy, crazy number. But James, anything you want to add about those programs?
Yeah, so I guess if we could just start back, and I apologize again. But we're gonna do the best we can and with the circumstance that we have. But just kind of reintroduce yourself. So I now have the slide up. So I myself, James, I've been in the business for about 25 years. Lewis has been in the business for I think over 30 years, and so we are the regional managers for Success Lending. I've been with Success now, going up on a year, and Lewis just under a year. And so we wanted to make sure that we showed, you could see that we're licensed as a company throughout almost the entirety of the country, with the exception of a few locations. In between myself, Lewis, and our counterpart Gary, we're able to cover. We're going to be kind of your point persons if you're looking to get connected with a local lender to originate, and you'll see the specific.
Whoop,
I think we lost him.
just lost James. Yep.
Oh no.
You're up, Lewis.
I'm back up hitting.
Yeah.
So we
Yeah.
currently have about there's about 50 originators at Success Lending all throughout the country. So in every state, we typically have, there's a couple of states we don't have anybody right now. One of them is Missouri. Missouri's a brick and mortar state. So we still don't have somebody in Missouri. If you guys know somebody in Missouri that's a great LO, we're looking for somebody in Missouri, but pretty much almost all the other states, we have someone licensed in, okay, which is really, really important for you guys, okay? So, and we'll get you the West Coast contact after the meeting for sure, okay? So that's really, really important. But we do have most products out there that people need, from VA, FHA, VA, we're Fannie and Jenny Direct, meaning we underwrite and process and fund the loans in-house. And then our backer to us is Kind Lending. So Kind Lending owns 50% of Success Lending. Kind Lending is owned by Glenn Stearns. Glenn Stearns owns a he's a billionaire, undercover billionaire, if you guys have seen that show. And he's been in the mortgage industry over 30 years. He started Kind Lending about 5 years ago, and they are a wholesaler. So they do about $500 million a month in purchase business right now. And that's our partner. So Success and EXP were very smart. When EXP approached Glenn as a partner for the mortgage side, Glenn Sanford wanted somebody who had a track record and that could really build a good foundation for the mortgage company for Success Lending for EXP. And that's why he partnered up with Kind.
Okay.
So just a little bit of background about us. I've been in the business 28 years, and it makes a big difference. So let's start with some of the questions let's get into what happens in underwriting, okay? If you have a good team and you do a proper job up front with the client, meaning if the originator who starts the process crosses his I's, dots his T's, and has a very good application, the main thing that an agent needs to be communicating with their client is to make sure that they're upfront and above board with what they're telling the loan officer, right? Because we have processes in the background that can double check what someone is telling us, okay? We have things like LexisNexis and fraud reports that when those files go into underwriting, those reports are ran and double checked, okay? The other main thing that we got to be really careful with when a file is going into underwriting is that usually 2 or 3 days before closing, we run a report. It's not a credit report, but we run a report that actually checks the balances of the credit cards and any new inquiries that have come to this person. So if all of a sudden they went shopping or they had several inquiries, the underwriter is going to ask why all of a sudden there's inquiries on their credit report. They're also going to check the balances on the credit cards. So if they see credit cards all of a sudden going up, well, all of a sudden the underwriter can say, hey, we're going to have to pull a new credit report. This may change our DTI. This may change our ratios. So we at Success, we actually send out a video to the client immediately when we start the contract process, explaining to them, hey, make sure you don't go buy new furniture. Make sure you don't change your credit card habits. Make sure you don't start charging things just because you're buying a house. Wait till after closing. But we have a system that automatically sends that video out so that we make sure that the clients know. But it happens a lot when someone goes and thinks they can just go buy a car or go do something before closing because they feel that they're approved. Just because you're clear to close, there still could be something at the end that can tear something up on a file. So you got to be really, really careful with that. Okay. James, anything you want to add on some of that? If I get him back.
I'm not sure James is back yet. Hang on one second.
Yeah, I'm trying to see the chat and I can't see the questions at the same time, but I saw quite a few come in.
Yeah. Well, let me check another spot here in one second. James.
Yeah, he's not back in yet that I can see.
Yeah, he's not back in yet. Well, I know one of the things people are curious about, or when a loan application is submitted, um, you got the sales agreement, you got everything you need. So there's a pre-approval process, and then later on you get the appraisal, and there may be other things too that come on board to the process, and then you go into the underwriting, the final underwriting, the actual loan approval process. What are some of those requirements? Like by today's standards, um, you know, we're always looking at the four C's: cash, collateral, credit, and character. Can
I think
we
I
kind
lost you,
of,
Gary. Can you hear me? Oh, there you
yeah, yeah. So we're looking at cash, collateral, credit, and character. Can we unpack that a little bit? What are the lenders looking for right now in that relationship between those four uh, factors? Like in other words, if somebody has a stellar credit score, will they back off a little bit on the amount of cash somebody has, or what's your understanding of that part of the process that it's at the beginning of the loan application process?
I mean, they, if the application for the beginning is done right and the information is, what I do is, and I've been doing this for a long time, I don't believe in throwing mud on the wall. I don't know if you understand what I'm saying. There's a lot of lenders out there that'll just take the application as is, not really verify what the client says, not going into the nitty gritty, and then giving them a pre-approval. And 2 or 3 hours on the front end on the pre-approval process to make sure I have the asset documents, I have the income docs, I've looked at the tax returns. I'd rather do all my due diligence
Hey,
up
Lewis,
front so
Lewis,
that
if you
that
can hear
way
me,
at the
Lewis, if you can
end,
hear me, you may need to pull over
we don't
because
have
we're
these
not
issues with
understanding a word you're saying.
underwriting, right? So it really depends on how you do the homework up front versus the way other people. And I make sure I run automatic underwriting up front as well. Yes.
Hey, Lewis, you may need to pull over. You're breaking up awful
Uh-oh,
badly. We just missed the last
you lost me.
1 or 2 minutes.
Can you hear me now?
Yes. Yep. Yeah.
No, they can't hear me. Hello, hello.
Hey, can you guys hear Lewis? Okay, I just want to make sure it's not just me.
No,
No,
I can
no.
I can hear him, but we lost him too. It broke up after he said mud on the wall.
I didn't even hear that.
Yes.
Lewis, you
Okay.
still there?
I heard yes.
Okay. Sorry about that. Can you hear me now?
Yes.
Yes.
Yep.
Okay. Yeah, we're gonna try to find a place to pull over here in a minute.
Okay.
So I'll go back to throwing mud on the wall and see if you guys can hear me. So there's a lot of
Okay.
lenders out there that basically will, can you hear me?
Yes.
Yep.
That will throw mud on the wall. So basically they just take an application, they take the information from the client as correct, right? Now, we know as agents and as loan officers, if a client fills out an application, they may not always tell the full picture, right? Or they may not put their full assets on the application. So I'd rather spend several hours up front working on an application and making sure we run the AUS, we run it through GUS if it's a USDA, run it through the different situations so that we know up front. I'd rather send the file to underwriting ahead of time as well, where a lot of lenders won't do that until after they've received the appraisal, after they've received title is when they'll send something to underwriting. If I feel uncomfortable with a file, I want to make sure I send it to underwriting beforehand. Okay. Not after. That's something that I'm very promise something and not deliver. Okay, so that's really important. So when we're looking at what's going on with underwriting today, it's changed a little bit in the aspects they want to see a little bit more solid assets for certain types of clients, especially when it comes into the jumbo range, the bigger loans. But in your Fannie Freddie loans, with all the different DPAs that are out there and available, you really don't have, if you have a good, strong credit profile, you really don't have to have the big solid assets that you do when it comes into the jumbo type loans. Okay. So I did scores 620, 630, 640, buying homes using DPAs and being able to get into a home at almost no money out of pocket. I have a young couple right now that's buying a house using a product called T-Shack that we have here in Texas. And we got them 3% help in closing costs. And they were able to get into a home for about $350,000 home for about $3,200 total out of pocket. So there are products out there to help people that don't have a lot of money that we're still using today. Okay. Can everybody hear me?
Yeah.
Oh, okay. I see a couple people frozen. I'm like, oh, did I goof? But when it comes to underwriting, as long as the job of the processor was done properly and the loan was done properly from the beginning, you should not have those last minute surprises that I hear from other companies that I hear over and over again that are happening, right? A loan not closing for 2 months and those things. I've never had that issue personally. Now I've had the issue where someone had actually died, the seller died, and that put us behind 2 months because we had to wait through probate to get him to make sure that the wife and the heirs and all that stuff went through before we closed. That's the only loan I've seen in like the last 10 years that did not close on time or had a major issue at the end. And that's because we couldn't provide a seller at the time. So it's very rare that I see those issues but maybe it's because my team communicates a little bit different with the clients. So,
Okay.
any other
Now,
question? Go ahead.
yeah. What can the agents do at the beginning of the process? Let's say they meet somebody that's, that they answer a Facebook post, they want to buy a house. Most agents know that they have to get them at least pre-qualified, if not pre-approved. But what can the agents do to make sure we're only putting through people that we believe are going to actually get approved? There's nothing worse than going through all the paperwork only to find out the person had no chance of being approved. Are the things we can do as agents? I don't mean wave a magic wand and make somebody's credit better, but as far as questions we ask to an agent pre-approval or pre-qualification before we even go take them look at houses, things like that. What are some of the things that we can do, Lewis, to help you guys when we hand a ball over?
Well, I mean, first of all, I mean, you're going to build a relationship with that person. So I always believe in using Ford, family, occupation, recreation, and dream, right? And in my case, I changed it from Ford to family, occupation, recreation, and money. So I always ask, I always teach my agents to, find out about their family, find out about their occupation, find out why they want to buy a home, find out some of the details that, do they have money to put down? Do they need help? Just try to figure out all that from them as you build that relationship with them, right? Because most people aren't going to tell you right away everything until you've built that rapport. You got to build that rapport with them first and truly be the advocate that you want to help them find the right home for them, that dream home that they want. But at the same time, you don't want to go show people a home that have a beer, that have champagne taste, that have a beer budget. Because I may qualify somebody for 350, right? And they're looking at $500,000 homes. You go show them a $500,000 home because you just want to show them a nice house to meet them at, and then you find out they qualify for 350. It's hard to get them off that $500,000 home they saw, right? But in every price point, there is a home that will work for them. if they're looking in the right price point. So I think that building a relationship with them, number one, and number two, asking find out about their family, find out what they do for a living. So how long you've been on your job? Oh, I've been on my job now 6 months. Okay, what did you do before? Well, I was unemployed for a year. Well, that's a red flag, right? Number one red flag, right? Really, what happened? So those are things that when you're talking about their occupation and how long you've been on the job, uh, um, oh, my wife is self-employed. Okay, so what does she do? Well, she cleans houses. So how long has she been doing that? Well, she's been doing that for 5 years. Great. Does she report the income? Oh no, she gets cash. I mean, those are things that little minor questions that you can ask to find out things that will give you a broader picture of what's going on, right? So that you know what's happening. And then you're finding out about them at the same time, right? Um, and then recreation. What do you guys do for fun? Find out what they do, right? And then with you guys, I always talk about the dream of home ownership. I always talk about the money. So, what would be the perfect monthly payment if you wanted to buy a home? Well, where do you guys feel comfortable? I mean, you guys are renting now. What are you guys paying in rent? Oh, I'm paying $2,200 a month in rent. So if you owned your own home and you're building that equity, where do you feel comfortable? Where do you want to be? Well, I don't want to be more than $3,500 a month. Simple questions like that you find out from them where they're at will get you in a better position to what they are. But a lot of agents are afraid to ask the client those questions because of the fact that they just want to go show them a house and sell them. You really got to kind of sit back a little bit and start asking the right questions and then building that rapport with them. If that makes sense.
Yep. And so that was, did we just lose Lewis too? Hey guys, what was the Ford? F is family. I got R is recreation. What was the O?
Occupation and
Occupation.
dreams, and then he makes it form, and M is for money.
Occupation. FORD, form, and money. Okay. All right. Well, hopefully, this could be the fastest class in the history of our team. Let's see if, let me check the participant box. Hopefully one of those guys can come back on, because here's the thing I wanted them to say for last is, when I spoke to these guys, their boss, he was telling me that they are going really all out to help us with our marketing budgets. So hopefully they'll come back on, because I don't know the particulars on that, but they're going to tell us a little bit about that. Which I know is really good use right now, considering where we are in the real estate market and the economy. By the way, we are seeing inventory loosening up in some of the areas already around the country. Has anybody noticed that in your area? In other words, the pendulum starting to swing the other way a little bit.
Interest rates?
We're not really interest rates, but the number of buyers actually saying, I'm tired of waiting, I'll pay 7%. And sellers, same thing, they're just tired of waiting. It's like
I have a lot
stagflation.
of sellers lately that just said, I'll fill out a feedback form and they'll say, we're really motivated, we'll make concessions, we'll do this, we'll do that.
Mm-hmm. Yep. Yeah. I mean, by the way, that's what happens sometimes to loosen up in a market, is the consumer just gets tired of waiting, So, and that's their first natural instinct when prices go up or rates go up or both, is they're just going to sit and wait. And I think that they're starting to get tired of that. So, yeah, I don't have these two guys' phone numbers. I only have the boss. I could probably try to find them and look them up, but yeah, we could have them just dial in and just be audio, or if they can get back on the Zoom, just turn off the audio,
For those who are looking for what agent is in what state, like Dwayne, you were asking on the West Coast, I'll put a link in there to their loan officer map.
Okay. All right, that sounds good. Let's see, I got dumped, but severe thunderstorms. Yeah, there's thunderstorms all over the mid-Atlantic guys. Thanks for the success lending. So Dutch will get to that question once one of the two guys comes back on, because they'll have to answer that one. That's a specific thing. In Keela, I did ask them when I interviewed I guess the director for success lending. They do work with people who invest and have LLCs. They also can do some commercial lending, so that's pretty cool. They do multifamily. I think right now they're looking to grow their business, and that's a good time to get to work with a lender, because they're gonna basically make the stretch for everybody. So Dwayne, in that link that Rob posted, you should be able to find out who is, and I think it is Chris in the area, because I actually spoke to Chris. Before I even spoke to the national director, I spoke to Chris, and I'm pretty sure he was the Great Northwest, well, West Coast, I guess I should say. Let's see, Chris Myers. Yep. Let's see. And then what we can do, guys, even if they don't come back on, I'll email the director and see if they can give us a settlement sheet. Now, the settlement sheets are pretty uniform across the country. That's something that's dictated by the federal government. So it can be little nuances, little differences, but I don't really think there's anything material that would be different. Let me go back down here to the bottom. There's Chris Myers. Okay, thanks, Rob. Hey, Rob, see if that link has Lewis's contact information, or James
Hampton.
Hampton. Thank you. Preferably Lewis, because James was in the hospital with his dad, so that's probably not going to be a good bet there.
Hey, Gary, I just looked up Lewis. Just Googled Lewis and the word success lending, found that from there, found his LinkedIn, and from LinkedIn found his actual webpage. So his email, phone number, direct contact, I just posted the link.
Okay. You grab that real quick and I'll text him. Hopefully this is his cell number. All right, just give me.
Is there a point of contact for the commercial guy?
I just posted his phone number.
Yeah, I think from what I understand, I think that was Dana. These guys do both. It's not like they have a separate division. They just handle the financing for both EXP entities. Okay.
Cool.
972, 972-890-0048. Okay. Not in Lewis. See if you can dial in only. Okay. All right, let's see if that works. Hopefully that was a cell phone and not a landline. Okay, looks like that text went through, so we'll see. So I think, Dana, that was for what I remember, unless you probably haven't worked with those guys yet. I mean, do you have other information though, like from Mike or Jeff, that indicate that like Success Lending has a separate division for commercial, just like the real estate entity does? Hi, I just want to take a moment to thank you for watching a recording of the Monday Night Live class. Hope you're getting a lot out of it. I'm sure you will. I wanted to let you know that, you can come to Monday Night Live whenever you want, but you can also participate more with the team. Why don't you set up a call with me, a one-on-one strategy call? I can go over everything with you, show you everything that we have to offer. For example, did you know that on our team, not only do you get your leads, we actually give you your own account on our lead gen system. So this puts you in control. You're not waiting on somebody to hand you leads. You get to pick the ones you want. Okay. Huge difference. We have 21 of our own proprietary marketing campaigns. They're all copyright protected. We're the only ones that can use them, okay? The coaching is absolutely one-on-one. We got 3 coaches. We even have a 4th success coach that we have access to, okay? One of left fewer than 100 in the world, okay? One-on-one coaching. Right now the big problem is volume. We need more transactions. We need more inventory. I get it. Well, we know how to get it. Our team actually outproduces the national average by more than 2 to 1. So if you're struggling, don't do that anymore. If you're a solo agent, if you're a team, let's just talk. Smart entrepreneurs are always open to discussion. Learn what we have to offer, and then you can make an informed decision about staying where you are or moving on. You got to decide, if you're not where you want to be, you've got to take action to get where you want to be. Let's see how we can help you do that. I look forward to talking to you. Click on the link, set up a call. And by the way, I'll see you on the next Monday Night Live.
I hadn't heard about this until joining the call a few minutes ago. It's pretty exciting that as shareholders, we're making more money in multiple, more ways.
Yep.
But I'd be glad to see what type of property categories they lend on and get going. Mike might be on the call too. I'm not sure.
Yeah, and I'm not sure about land. Somebody, I think it was
Your land. We don't worry about land.
Yeah, I think Mike
too
was
weird.
asking about that. But I know that they did say they do residential, commercial, multifamily. I don't know that they would do a like a short-term loan. That's not who they are. Like for a flip, some people will buy a flip, use short-term financing to buy it and do the remodeling and then sell it. Or if they're going to keep it to rent, then they'll refinance once all the remodeling is done. That's what I used to do. I don't know if they do that. Usually you've got to go to a local, like a community bank, or somebody that's not using any of the, Fannie Mae programs or VA programs or things like that. They, FHA for sure, because everything follows FHA. But Fannie Mae's, usually owner occupied, even if it's like a 4-unit property, the buyer has to actually live there for a couple of years. So,
Hey, Gary,
yep.
in Workplace, they're all available there and all their information is there. And it says that they do have a division for investors doing flip loans and commercial multifamily.
Nice.
They
Okay,
also
good.
have home loan in our back office in our expo. So if there's something that Success can't do, we can do com loan. Com loan is very good.
Okay. Well, that sounds good. You know what? So if I go to Workplace, I can find the Success Lending page.
Yeah, just click on the Success Lending and go into their group, and all the information is there.
Okay, I'm going to go there now. Then I'll share my screen. Come on, computer. Boy, is it slow. Okay, here we go. Success Lending. Okay, let me go back here, share my screen. Okay, here we go. So Lisa, was this just in the timeline, the center panel? We were seeing that?
I searched commercial loans, and now I'm finding some other information.
Okay.
One guy said no, only 1 to 4, up to 1 to 4, but we have com loan. Com loan can do it. And for anybody who hasn't walked through the expo, they're just in the expo in the world. And I bet they have a Workplace page too.
Okay. All right. And just
So-
looking to see if there's anything.
I'm
Sure.
looking at something on the NEXP, and it says that they're bringing the top minds in the mortgage industry to reinvent the mortgage process through technology and process efficiency while humanizing the mortgage journey for home buyers. Said they're originated at $4 billion in the first 12 months, and they were ranked the 22nd largest lender the first quarter of 2021.
Yeah, Gary, the question is, does Success Lending have products for investors such as flip loans or commercial multifamily? And the answer from Terrell Morris, who's a loan officer, says, yes, we do. Our PMU. So if you go in, actually, I'll send this to you. I got to go answer the door. I got UPS at the door.
Okay.
Sorry.
That's okay. Okay. All right, here's something from April 10th. EXP Realty Family Loan Program. Let's see, you get 100% EPS or 1% of the loan amount in lender credit on a conventional loan, 125, which is 1.25%. Its basic BPS is basis points off the loan amount in lender credit towards VA FHA program. Primary, secondary, and investment properties are eligible. Purchase rate and term refis and cash out refis are eligible as long as there is an EXP Realty staff member, agent, or broker on the application you're in. Okay. So this tells me you can I'll just go over cash out refi. So what we did when we were buying rental properties, guys, is we would go and typically pay cash for them, remodel them, raise the rents because they're now nicer, rent them out, then go to the bank and get a brand new first mortgage on the property, and we would be able to cash out. So whatever we had into the property, right? And the gap between that and the appraised value, they were going to lend us 80%. Actually, they would lend us 75% loan to value. So if we had into the property only 60%, then 15% of that cash was considered cash out. So, and that would work the same way as if we had a loan on the property. Let's say we bought a fourplex with a mortgage for 60,000, and then we remodeled it for 20,000. We have 80 into it, and then we go to the lender, and let's say we put 30 into it. We got a loan for 60. We put 30 into it on another loan, right? Like a secondary or personal line of credit, or a home equity line of credit. At the end of the project, it's worth 120. We would get a loan for 90,000, and that would pay the everything that we put in, that we bought the property and all the remodeling. And if we'd only put in, say, 20,000 in remodeling, like I mentioned before, that would mean we'd only had 80,000 in, 60,000 purchase, 20,000 remodeling. And if we got a loan for 90, that means we got to keep the other 10,000. And we did that all day long. So those loans were kind of taken off the table for a couple of years, but they've been back on. So in any case, it's essentially a refi, but you're paying everything off. You're cashing out any difference, and the rest is equity. So it's a great way to have cash, equity, and a low interest rate, a conventional rate on a loan, and your rent should cover. So this tells me these guys are definitely willing to play. And here's all the states. Let's see who's actually putting this post out here. That's Chris Myers. There you go. So, I mean, he's listing pretty much everything these guys were talking about, from Alabama up to Washington. Oregon's in there, California's in there. So I'm guessing Chris is the guy for those markets, because the other two guys that were on were more south, east, and north, So in any case, that's really good news. I would try it out. And see how you like it. Remember, you're not required to use them, although it would be good if you did, because technically you and I are shareholders. you know? So I'm just trying to scan down and see if I see anything else. 1% down payment conventional loans. That's Eric. I've actually spoken to him before too. Yep. Well, that's pretty good. Has anybody done a 1% down loan with any of your clients?
That's owner occupied, obviously, right?
Yeah, they would have to be. I mean, that's the first I've heard of that. So, how you doing, Charlie?
Good. How are you, man? Good to be here.
How's the paperwork going?
It's coming along.
All right. Well, welcome aboard, guys. Charlie's going through the process of joining. Rob Perot's on. Rob just finished the process of joining. So, welcome aboard, guys, and glad
Thank
to
you,
have you
sir.
on the team. You know. Yeah.
Hang in there, buddy. He said paperwork was going. there's a lot of it. I got bombarded with 3 days worth of just welcome aboard, do this, do that, hokey pokey, left leg, right leg, do this, do that. But
yeah. So guys, Mike McGrath's just saying seems to get some multifamily owners and sellers that are doing after accounting in order. So, and this is really one I wanted to have. I think James was going to go over that because he's the one that had the PowerPoint, but show you, and then we could share that in the after class email from Beverly. What is it you need to know when you're working with your prospects, your buying prospects? What do they need to know about qualifying? Instead of just rolling the dice and trying, it sure would be nice to know in advance. Are they ready? And if they're not, we have to put them on a drip campaign. And you can work with lenders to help these folks improve their credit. I mean, sometimes it's 3 months, sometimes it's 6 months, sometimes it's a year, but often it requires them to pay off some debt, increase some savings, and stop, doing things that harm their credit score. Like having too many credit cards, or every time you go to the department store and they say, "We had a great deal today. Just sign up for a credit card, and then you can get 25% off." I mean, how many of us have been tempted by that one, especially at Christmas? You go to Macy's or Nordstrom's and they're like, "Hey, we're going to give you 25% off. All you got to do is fill out this credit application." Well, that's a ding on your credit. And man, I'm telling you, everybody falls for it. I used to too. Now I put the blinders on. I said, "No, I'm not going to do that." Um, it's great to get a big discount, but just be aware it could have some other longer term implications. So okay, well, let's do this. We can go ahead and start to wrap this up. Before we do, I just want to see if anybody has any questions. It doesn't have to be about tonight's subject. We'll get the information out to you tomorrow on success lending. Looks like Lewis. Oh, there he is. Hey, Lewis.
I dialed in, but you guys couldn't hear me.
Yeah, no, we didn't even see you. I was looking for the attendee list, but we
every time
looks like you changed vehicles.
Yeah, every time I tried to get in, it would say it would send me a webinar email, but it wouldn't let me back into the meeting. So I apologize.
That's okay. Hey, what is when I was speaking to and I apologize, I'm drawing a blank on his name now, but I think he's like the director. I don't know if he was a CEO, but Success Lending, and he was saying that there's the lenders are allowed to participate with the agent for a while on shared marketing costs. Do you have any more insight on that? I mean, that's one thing every agent's really interested in and anxious about, because the way the market is.
Yeah. So we have done different agreements with different teams that come together. So we've done some desk rentals. We've done some co-marketing with different teams that are joining together to market with like realty.com, different, not realty, realty.com, and help with those offsets. And then we've also done boost. We've helped a lot of the agents boost, like we'll split the cost with boosting their listings. And we've had a great return on that, because the average boosts we're doing on listings, we're helping the agents get anywhere from 14 to 18 lead referrals that come in. I just did one for a listing this weekend for an agent, and we ended up getting like 12 leads that came out of it. And it was people that were more qualified because they were looking for homes in that price point. So it made a huge difference. So there's a lot of different things that we can do with agents depending on what they want to do some co-marketing, right? We try to do it together. As you know, if a team does it together, it's a lot easier than us doing it individually with each realtor, right? So we have different levels that we can do on that. So it just depends on what you guys want to do. Okay. On that.
Okay. Okay. There's a couple questions in the chat box. One of them's from Mike McGran. He's in College Station, Texas.
I like College Station.
Is there a way to get like a detailed list of lender, underwriting requirements? Sometimes with investors, they're not organized, they're not structured, almost like some agents sometimes, just you don't know what you're going to get. I mean, they've already got rental properties. No lenders are used to working with it, but is there a guideline is there an attachment somewhere we can get a hold of? Do you know of, Lewis?
I mean, it really depends on the type of program. As a loan officer, we're taking around people and putting them into these square holes of guidelines, right? So, you have an investor that has several properties. His list of items I'm going to need from him is going to be totally different than a first-time home buyer or someone who's buying a second home. Okay, so it's going to be a totally different animal. And then now with DSCR loans that we do in-house as well, we may not need any of that information. So depending on what, and I don't know if you guys know what a DSCR loan is, a debt service release loan. Basically, if the house rent covers the mortgage payment, and the gentleman has good credit and they can put 20 or 25% down, we don't require anything else. I mean, it's that simple on the DSCR. So each level is going to be different. I have a gentleman right now buying a $2.7 million home here in Dallas. He owns 6 different rental properties and he's buying a primary. Well, he found out after he went to several different lenders that because he owned more than 5 finance properties, he wouldn't fall into the lower tier on the jumbo loans. And then he came to me and I said, yeah, you got 6 properties financed right now. We're going to have to find an alternative to do your jumbo. And we were able to do it. We kept it in-house and we're doing the loan here at Success, but he was having a challenge trying to find someone to do that loan. And he's got stellar credit and he has, a ton of money in the bank. And he couldn't find the lender to do that loan because of the amount of finance properties he had. So it's like each, like I said, we're taking, like I said, round people and putting them in the square holes. Your basic stuff, I mean, 2 years tax returns, W-2s, last 30 days pay stubs, assets for the last 60 days. Those standard things we need to have at least up front on everybody. But guidelines are so much different from product to product now that you just got to have you got to have an expert that knows what he's doing to make sure we put the client in the right program, right? So that we don't run into those issues.
Hey, for the debt coverage service ratio, DCSR, is the rate on that generally higher, like on average, higher than other loans because they're relying on the property, not really so much the borrower,
Correct. So and believe it or not, it's really weird because our Fannie Freddie loans right now on the investor and second homes have pretty big hits, right? So if you're putting 20% down on investment property, you have about 3.76 or 3.75 points built into that rate. So you may be looking at an 8 or 8.25 even on a regular Fannie. Then you switch over to DSCR and you're going to be maybe a little bit higher, but you're going to end up buying down or paying some points. So typically what I tell my borrowers that are doing DSCR, go ahead and plan on buying 2 points. That way we can get you a decent rate. And then they end up at like 8 1/8 or 8 1/4, a little bit higher than your Fannie Freddie, but they're still getting into the property because they want to get the property and they want to build the appreciation of the property and they want the property to pay for itself, right? That's the name of the game on the DSCR loan. Okay. It's a little bit different. Therefore,
there's some others that somebody was asking about financing land.
So Success, we do have a company that does do land loans that we do broker to. So it's not something that we keep in house. Okay. I just caution people on that because when I feel that when I don't have control over a loan, I don't feel like we're going to give the best service, right? So I'd rather warn people ahead on that. We do USDA loans in-house. So we do quite a few USDA, those who lower population type
What,
homes.
you want me to plug in?
It's 100% financing. So that's something we do have. For self-employed borrowers, we have, like someone just asked about 4 different types. We have a bank statement type loan that we do in-house, which we use the business bank statements for the last 12 months. And depending on the type of business we might use a 30 or a 50% expense factor. So perfect example, I had a young lady who owned a convenience store, didn't have gas. She was running about $60,000 a month in sales through her convenience store. And we were able to use $30,000 a month in income to qualify her on a bank statement type loan. And she ended up buying about a $500,000 home here in the Dallas area. No one was able to ever get her a loan before. So that's one way of doing a self-employed borrower. Another one would be what they call a P&L, a profit and loss type program, which that one, the rate's a little bit higher, but they'll take a profit and loss statement from their CPA. Or another one we do is also in-house is the 1099. So if you have someone who has a 1099, they'll use the 1099 to qualify for a house. So those are the ones that I've seen most lately. I do more of the bank statement loans than I do the 1099 or the P&L type loans. But all of them require some down payment. So if you got someone who's a 1099 or a bank statement, minimum down payment on a bank statement type loan is 10%. So if you got a gentleman that's doesn't have any money or wants to go DPA and wants to go bank statement, that's not going to work, right? That's just not going to happen. So, but there's a lot of different products out there with the bank statement type loans right now. Okay.
Okay.
For self-employed borrowers.
Okay.
What kind of
idle
points?
loan, ITIN. I'm sorry, Karen, go ahead.
I was just going to ask what kind of points you have in fees for your DSCR loans. I just had one closed not too long ago, so I was just curious. I had a client who had one close, and I was just curious what kind of fees and
typically it's the $14.95, which is our standard admin processing underwriting fee, and then usually it's 2 points because we're doing it on the DSCRs, unless we do a lender paid. And if you do a lender paid, then the rate gets really awful. Like the 1-to-1 ratio is really hard to hit when you do the lender paid. So I'd rather have the client pay the 2 points so that they get a much closer rate to where Fannie Freddie is, and then the 1-to-1 ratio works better.
Yeah, but you're paying 2 points, but you're still in the 8s.
Correct.
Right.
I've seen the high 7s on that program too.
Yeah. Okay. Do you have a range that you use for those DSCRs? I mean, is there a certain max that you have, or is there a max?
No, there's not a max on them.
Okay.
I've seen them as big as $1.5 million in California. And I've seen them do them on triplexes. I've seen it on fourplexes without an issue as well on the DSCRs.
Okay, so $1.5 million is your high
that I've done.
Okay.
That I've done. I've seen them go higher.
Okay.
California, you see a lot higher numbers than you do Texas, right?
Okay.
So, I mean, I think there was a duplex in LA that was a couple $1 million. I thought that was ridiculous, but each state is a little bit different. So there's no maximum that I've seen so far on the DSCRs. It just depends on the investor. Now there is a maximum amount of loans they'll do. So most DSCR lenders will only do up to 10 properties, right? Kind of like Fannie does. And then after that, you got to find somewhere else to take them. That same group doesn't want more than 10.
Okay, thanks.
Okay.
Now, who had a question about College Station? I didn't see it in the chat.
Question about what?
Somebody that was in College Station had a question.
Oh, yeah, we actually, I think we covered that. Let me go back up here. That's Mike McGran. Hang on a second here.
That was about multifamily documentation.
So someone trying to buy a duplex or a quadplex?
Yeah, the
Yeah, that was
question is on the property side, I get a lot of sellers that don't have their accounting in order. And so just wondering if in tomorrow's attachment or a future attachment that you guys could send kind of a due diligence list on the property on what you need to qualify a multifamily property. Basically, I can't motivate some of my sellers to get their accounting in order, and they don't realize their accounting needs to be in order to help get the property sold.
Well, I typically deal only to fourplexes. So after fourplexes, you get into 8, 10, that bigger number, that's more commercial. So I really don't work a lot on that. But typically when we're doing DSCR, those type of loans, we typically will ask the landlord to give us the last 3 months of proof of rent received through the bank. Okay. So they may not have all their CPA and all their stuff in order, but if they can prove to me in the last 3 months they've been receiving that rent, then we'll use that to offset so they can still buy the property. And I actually had one that the rent was much higher than what the appraiser came in on the DSCR, and we were able to use the higher number because he did have the last 3 months proof of receiving the rent. Okay. And that's on your duplexes and your triplexes and your fourplexes. When you get into the bigger multifamily, big stuff, I can't help you there. I really don't know how they underwrite those anymore. Okay. So on the bigger units, but on your smaller stuff, yes, we can get away with just asking for the last 3 months.
What
Does that
about
help,
if it's
Michael?
what if it's a conventional or FHA loan on a duplex or fourplex? What due diligence on the property do you need?
Well, if we're doing an FHA and they're buying a duplex, then the person has to make sure they're going to be living in one of the units, right? So that one unit has to be their primary. They can get away with 3.5% down to buy the property. And then we do want the other side rented so that we can offset that rent if they need it to qualify, right? We need to have it because what the appraiser is going to do, he's going to look at the property and it's FHA. If he sees any lender required repairs, he's going to ask for it. If the roof is bad, if the bathroom's bad, if a stove is missing, it's going to be a little bit more strict buying a duplex on FHA, but it still works. You can still get them done. Now, Fannie Mae came out now with a 5% down conventional on duplex and triplex and fourplex, as long as one of the borrowers is going to live in one of the units as a primary as well. And that just came out a couple months ago. So I don't know if you guys were aware of it, but now you can do conventional multifamily or duplex, triplex, or fourplex, as long as one of the units is going to be lived by the borrower and the other 3 are rented, the other 1 is rented, then they can go in as little as 5% down. If their credit's not as strong, conventional, I had one month before last, it was a 668 credit score in he was trying to go conventional in New Orleans, and he ended up having to put 10% down, but we still got it to work. Okay, on duplex. So he was excited about that because he didn't want to have to come up with 20% down like he had to in the past. And this was his second duplex he was buying. He had bought one 3 years ago and was moving out of that one, moving into another one. Smart guy. Smart guy.
And the resident length of time for the borrower, is it a year now? It used to be like 5 months. Is it a year
Used
now?
to be 6 months. Now they want to see a year.
And the lender will still credit 75% of the income to qualification?
Correct.
Okay.
Correct. On rental. On a departing resident as well, 75%. So I have a lot of clients now that are, if they don't want to sell their home, they have a 3% or 4% rate on their current home, and they want to move up to a bigger home. They want to buy something bigger, and they're keeping their old houses. They're not getting rid of them as they were before. So they're renting. We run an appraisal on the current home, and we find out what the rental comps are, and then we use 75%, or they get a lease. They get a lease and get it to me as well. Typically, we want to see that they receive the first month's deposit in the bank before we close on the new house. So if they're going to rent their departing resident, the underwriter typically wants to see that at least the deposit being deposited in their bank account on the lease.
Hey, Lewis,
Yeah.
so for commercial, is there an outlet for EXP commercial? How is it?
Yes.
it-
So
Okay.
Cliff Freeman is heading up a company called Comloan. You guys know who Comloan is?
Mm-mm.
No. So Comloan was created about 3 or 4 years ago. It's a commercial, and Success Lending loan officers have a way to send commercial stuff over to Comloan. But
Okay.
you as an agent can also become a Comloan representative if you want and start doing commercial. We have there's a lot of training, there's a mentorship program on that side as well. And if you guys want to learn more about it, I can invite you to meet with Cliff Freeman. He heads up a lot of stuff for Comloan. And I've learned a lot over the last couple of years, I mean the last year, because of Comloan.
Okay. And Kelia, she's actually lived and worked in Texas, but she's up in the Berkshires right now, which is the beautiful mountainous area of Massachusetts. She had a question regarding, how do you manage an LLC acquisition, title, et cetera. Keila, if you can unmute yourself, you might want to expand on that just a little bit for Lewis. Let me find Keila on
There
here.
I am.
There you are.
Yeah, I actually think you sort of answered that question. I think I got that question answered, but I will say I am interested in in working with Comloan. So as it stands, I have it's a little bit complicated. Let's see, how do we want to parse this? I have a nonprofit, but one of the partners in the nonprofit is a high net worth individual. And so how it works to sort of prevent any inurement is, so the nonprofit itself does transitional housing for folks, we're clean and sober homes for folks with addiction. And then what he does is he's the investor that comes in and buys a home, and then we lease from him. And so he wants, of course, to have all these homes, bundled within LLCs, for his protection. And so it's kind of the question of, should they be acquired? And I know, like they can be acquired as a conventional loan, and then you just sort of roll it into the LLC, and nobody, don't ask, don't tell to the lenders. And as long as payments are getting made, everybody's kosher. I don't know if he's going to be entirely okay with that. So maybe we do need commercial, and then at some point he'd like to invest, at a little higher grade, in terms of multifamily, or larger projects. So those would definitely fall into the commercial side. So I guess that's sort of, I think my question was sort of answered, but maybe you could, go into some detail in terms of thoughts of what would be some strategies.
So he's basically buying properties, and then he's renting them to the nonprofit?
Yes. So the nonprofit leases the property. So the nonprofit, our participants or our clients, they're not tenants. We are the tenant as the nonprofit.
Ah, gotcha. So he's just buying the houses, and then you guys are leasing them from him. So he could actually buy more and more properties using the DSCR type product and closing in the name of the LLC. That's the other thing about DSCR. DSCR, it's an extra charge. I think it's $250 more to register, to do everything, all the paperwork in the name of the LLC. He still will be the guarantor of the loan, but the property and the loan will not show up on his personal credit. It'll show up as a loan for the LLC.
Okay, perfect. Now, would it be qualified under his credit though? I mean, he would be the qualifier. Yes. Okay.
Yes.
All right.
Score would determine where the rate would fall.
That would be my understanding. And he's happy to come in at 25 or even 30%, just to make sure that we, the payments are reasonable in terms of our lease agreement. So that's great. I don't have your info, I think in the chat, if you could throw your, because currently we have a Series 3 already set up for Texas, and our nonprofit is actually based in Dallas. So
Oh, wow.
Yeah, so we're looking for 3 houses right now, over the next, 18 months. So I would love to just, call you up and we can get the ball rolling.
I just put my team number and my team email in the chat. So I work together with Jill Fleming. She's been my loan partner now for 10 years. Jose Mendez is one of my junior LOs that works with me also with a lot of my Hispanic clients. And then Jamie, who's my processor, used to be my underwriter for 26 years. So that team, we've been together for quite a while. So we have a team email that we use, Rockstars at Success Lending. The reason why I use that is it's better to have three sets of eyeballs looking at what's coming in than just mine. Because I do a lot of events. I do lunch and learns once a week. I do the regional rallies. I'm on Texas. I'm on the meetings so I'm always going. So I always want to have one of our team members ready to take care of your clients right away.
Awesome.
And then we also take turns on weekends to make sure someone's available for pre-approval letters or going over numbers with clients, because that's important. That's really important.
Absolutely.
Yeah.
Just a quick question. My chat says it's disabled and I'm not seeing it come
Oh
up.
no. I just sent it to everybody. No, write it down. Rockstars at successlending.com. Rockstars with an S. And then our team number is 972-890-0048.
972. Go ahead and give me one more.
890.
Okay.
0048. That's our team number. That goes to all three of us.
And it's Rockstars.
At successlending.com.
Oh, okay. Perfect. Okay. All right. Thanks so much. Appreciate it.
Yeah. We're here to help.
You might have missed the beginning when I promote you to panelist or Rob. Go ahead and do that, because then you'll have full functionality.
Oh, okay. Well, I won't tonight.
Yeah.
I gotcha. As an attendee, I don't get all the perks.
Yeah, and we do.
It really does. It helps us too, So.
Okay.
Yep.
Gotcha.
Go ahead, Lewis. I'm sorry.
We do have the 1% down Rocket Mortgage program that's available through Rocket. We actually have it in house now. There is a limit. Loan limit is 350,000. Can't go over that on that program. And then we do have T-Shack in Texas, which is the 2%, 3%, and 4% DPA down payment program available. It's the Homes for Hero program that most people know about. We have the non-bond and the bond program, and you can be 80% above AMI. So actually someone who makes more money can also use that program, and you don't have to be a first-time home buyer for that product.
Okay. Well, good to know.
That's for Texas. And then our national down payment assistant 100% program will be coming out. I think it's the 19th or 20th of this month. And when that happens, we'll get a big boost out to everybody. And that's going to be pretty exciting, because it's basically going to be an FHA product that we help with the grant for the down payment. And you're going to be able to buy a home at 100%. Pretty scary stuff, but it's coming.
All right.
It's coming.
Yeah.
Thanks. Appreciate it.
Thank you, Keila. Hey, Lewis, we got a question from Dutch. Dutch is still on. It was early on. He just given you like a scenario, and you might need to talk to him directly, but I'll just give you the review. It's he's a vet. He's got a small credit line. He has not applied for a loan since 1992. Self-employed house buyer since 1999. Has low taxes paid due to having an excellent CPA. He's now Dutch, you're kind of losing me here. It says 77-year-old and 2000 in, 77 years old, 2000 in Social Security payments, 450K house. What chance does he have score or about to go to 700? So I don't know if that's going up to 700 or down to 700. I'm not
Well,
sure.
I mean, if he's at 2,000 a month Social Security, then he's going to probably need another, probably 4,000 or 5,000 a month in income from somewhere to qualify for that 450 home, unless he's putting a big down payment. Because a 450 home, you're looking at, depending on what part of the country, anywhere from 3,500 to 4,200 a month. As a veteran, you got to go full doc. So we'd have to use the last 2 years tax returns. Now, the good thing is If he is self-employed and he's getting the Social Security, I can use both incomes. So he might have another income. Or someone might be able to co-sign it, right? You can do that now with VA. Before you couldn't do that. Now you can. So there's some changes that happened to VA that most people don't know about. Okay. So, or go bank statement if he's self-employed, but he's gonna have to come up with some money. He's not gonna be able to use the VA program.
Can a non-veteran co-sign for a VA loan?
You can now. You couldn't before.
Wow, that's a big deal. I didn't know that.
You couldn't before, and there's certain parameters on that too. There's certain parameters that are in that as well. So those are things that have changed with VA, and of course VAs are still completely assumable by anybody as long as they qualify.
Right.
Most people don't know that at all either. So if a veteran has a house up for sale and someone who's a non-veteran wants to buy that property and assume his loan and give them the difference in cash, they can, as long as they qualify. As long as they qualify. So big difference. 80K in income turn.
Let's see. He's Dutch is saying there's 4 non-qualified loans for self-employed folks.
Correct.
What's your experience? And then what about rural areas, 10,000 population or less?
Yeah, that's I talked about USDA, and then we talked about the different loans, the bank statement loan, the P&L loan, the 1099 loan. Those are all different self-employed borrowed loans. And then I don't know if you guys know, but there's also an asset depletion loan out there that a lot of people don't know about. So you have a retiree, like the gentleman you talked about that was self-employed for all these years, but he's got $500,000 or $1 million in the 401k or the bank account. I have different avenues that'll do 60 months of asset depletion for a 77-year-old so they can qualify for a house. Fannie Freddie do a 240-month asset depletion standard, right? That most people don't know about. But I have a couple of vendors, I would say, that we sell to that'll let me get away with a 60-month asset depletion. So that person may qualify for that 450 home going that route. Okay. And then of course, the other one is he may have a trust. You can use trust income as long as trust income is going to continue for the next 3 years. Most people aren't smart enough to figure that one out.
Yeah. Okay. Well, I think that's pretty much it. You did answer Mike about contact you for commercial lending. Dutch was chiming at the end. He just mentioned 80K in income in 2023 and 50K in 24. So I guess that's year to date so far. So 80, that would be 6,000 a month plus 2, maybe 8,000 a month coming in with Social Security and last year's income.
He would qualify. Because remember, VA doesn't use DTI to determine the loan. They use what's left. So what on a VA, I've seen VAs approve at 70% DTI. The reason why is because VA looks at the square footage of the home, and they put a cost factor to maintain it, and they put a residual. So if he meets that residual, it doesn't matter what the DTI is, he qualifies for the loan.
Okay. All right, good.
Now the only case you'd have an issue is if it ends up being manual, because a manual VA underwriting, then we have to show 12-month history of rental to qualify them.
Yeah.
Okay. Those are just main little things. So I'm a veteran myself. I'm a Navy vet, and I love taking care of vets. I've been doing VA loans for a long time.
Okay. Let's see. Michael's asking, can Lewis go back over how realtors benefit working with commercial loans? Sounds like we can learn how to help the lending process and make a loan for. Oh, I think he meant.
For
go ahead,
combo,
Lewis. I'm sorry.
Get with me afterwards. Give me an email. I can get you some information, some presentation. You can become part of ComLoan as an agent, because remember, on the commercial side of lending, there are no TRID, there's no rules or regulations. So you can be a realtor, you can be whoever, and you can still get paid on a commercial loan. Okay, so that's something that's totally different.
Okay. Hey, where can people go, Lewis? So we're going to run out of time here in a minute,
Sure.
but we found you on the workplace page, Success Lending on the workplace page. But is there a website? Let's say somebody wanted to
Yes.
download or print off the latest
Just
product
look
offerings,
at,
for example.
if you just put my name in, lewisrios.com, it'll take you right to my website
Okay.
directly. And then I also have an app that I can also share. Let me see if I can share it. It actually has all my information. It also has mortgage calculators. It's got all kinds of information all the time. Let's see if I can. There's a number you can text to and you can get added to it. And it's a really cool device that you can actually use to share. So if you meet somebody and you want to share, yeah, the phone just died. It has the information on. So, but I'll get that information to you, Gary, so about my app. And that way someone can just text to it and it'll download the app and they'll have it on the phone and they'll have all the information, all the contact, everything ready to go. Oh, wait a minute. Yeah. It's like someone spelled my name wrong there. They put Rios instead of Rios. That was Gary.
Oh, that's me. It's for genius over here. Hey, by the way, on that app, I'm going to give you a Beverly's email. If you could email her the information on the app, she'll include that in the email that goes out tomorrow, the after class email with the recording of class and everything.
Yeah, that would be
anything
great.
else? Yeah. Anything else you have to share too. So, okay.
And then good news, guys, rates improved for the last 3 or 4 days. Today we lost a little bit, but we actually got interest rates a half better in the last week than we had been seeing in a while. So that's exciting news. Exciting news.
Yep. I agree.
It sounds like that the commercial side is like the wild, wild west. I'm going to have to saddle up here and get me some irons in that.
Yes, and if you call me and get involved with us, we can help you. You can even build the downline on the comm loan side as well.
All right.
Yeah, there's a lot of cool things going on, but I don't want to confuse everybody. This is supposed to be a residential mortgage call.
Good job. Great job.
Yeah. Well, Lois, thanks for everything you did tonight. I know it wasn't easy, but you came through and
I apologize. I can't believe the phone died. The wife had dropped me off to get a car that got us a little behind getting out of there. And I was like, okay, you drive, honey. I'll get on the call. We'll be okay. And we stopped 10 minutes from our house, and then the phone just cratered. So
yeah.
Sorry, guys.
Yeah, that's okay.
But any questions you have, you guys let me know. Call me. Reach out in workplace. Emails at the Rockstar Team. And like I said, myself, Jill, or Jose are always here to help.
Yeah. So, well, I appreciate that. And that's funny what you just said there about your phone and your wife. You're in Texas. Somebody in Texas could easily turn that into a lyrics for a good country western song. You know.
But I never give up. I never quit. I kept calling in. I was listening to you while I was sitting here. I heard what you were saying, but I couldn't get it to unmute. It's like, man.
Yep. It all worked out, man. We all worked out. So, well, thanks everybody for participating, especially the guests. We will always welcome if you're coming from another brokerage or you're an investor, you're not even licensed, that's fine. We're here to serve. That's why we bring in people like Lewis and Success Lending to share with you and make you part of the family. So if you're Lewis, as far as participating in marketing programs and things like that, I imagine that's just for EXP agents, or does that go for any agent?
No, that's only EXP. Only
EXP.
Yeah, we don't. No, we don't go outside of that. Remember, you guys own us. We be cheating.
Well, that's true. Yeah.
Can't be cheating. That's not good.
Yeah. Okay.
Yeah, and like I said, I'm always looking for great loan officers. If you know anybody that's a good LO that wants to come on board, we do pay a hefty referral fee to you guys. It's $10,000 referral fee. $5,000 after 3 months of them working here, and then $5,000 after 6 months. They have to be a producing loan officer. It means it can't be like your uncle Jerry that used to be a loan officer 20 years ago. They need to have an active pipeline that we can verify. And then we do pay that. I'm working on a second check that I'm paying somebody this month that referred somebody, which is pretty cool.
Okay.
I like giving out those checks. Those are exciting.
Well, I happen to know a lot of lenders, so I'm going to get the word out. So,
Yeah. Yeah. And we're one of the few companies that's actually hiring right now when a lot of people are laying off.
yeah. Yep. Okay.
So
Lewis sounds like the guy to know. He's the Texas speaker.
I'm a connector. They call me the connector.
That's
Yeah. Okay.
good job.
Well, listen, everyone. Take care of yourselves. God bless you and your families. For the GIA team members, we'll see you Wednesday night on the monthly team call, second Wednesday of every month. For those of you who are not on the team yet, you will be eventually. You can be part of that meeting. That's more internal. And but the Monday night class is open to everybody. As many times as you want. Invite people. And we're always looking for guest teachers too. So thank you very much, and thank you again, Lewis. And we'll see you in your one-on-ones Wednesday night, and then next Monday. Remember next Monday, Joe Herbert's coming back on with one of his agents, Matt, to talk about Matt's latest property acquisition. He's been buying multiple properties, so make sure you're here for that one too. So, okay, guys, we'll see you next time.
Thank you for watching this episode of Monday Night Live. Be sure to subscribe to our channel and go to realestatewithgarywilson.com to join our community and start building wealth today.